Good morning and welcome to Class 2 Income. And we are in Lesson 4B where we're going to finish up the income portion of the basic training. So we do have additional web access that will be made available by the end of today, which will include a class on deductions, including Lesson 5A, which is your standard deduction, and then Lesson 5B, which will focus on itemized deductions in the Schedule A. So looking at Lesson 5, interest, dividends, and other income, or this should be, say, Lesson 4B. We changed it. The key thing here is we're going to be talking about taxable interest, savings bonds, tax-exempt interest, and how all of these are reported. So diving right in, we're looking at unearned income at this point. Unearned income is where your money is making money as opposed to you personally working for that money. And the types of unearned income include taxable interest, tax-exempt interest, any dividends, any capital gain distributions, non-taxable distributions, as well as unemployment compensation. So when you are reporting interest in income and dividends, there are common types. These are common types of unearned income. Many people have interest in dividends. Most types of interest and dividends are actually taxable. If interest and dividends, whether they're taxable or non-taxable, they need to be reported on your tax return. And generally, if you receive interest over $10, it would be reported to you on a 1099 INT. Similarly, dividends over $10 are reported to you on a 1099 DIV. And in most cases, financial institutions are using what we call a substitute form to report your 1099 INT and 1099 DIVs, as well as other sources of income may actually come on a substitute form. So the forms that we're showing you are the basic forms, but in fact, you may see from your bank or from any other financial institution, depending on your personal financial situation, those forms may actually come in on a substitute form. If you have interest in dividends over $1,500, they must be reported on a Schedule B, and we will be reviewing the Schedule B as part of this class. So this is what a 1099 INT looks like. And this is what a 1099 DIV looks like. One is that you see all of the different boxes. When you have a substitute form, they are going to give you the box numbers over here. So here you see the 1A would be your total ordinary dividends, 1B, and it's going to put at the top, there will be a header. There isn't a standard order, so you do have to actually read the form. It will tell you whether it's the information off of the 1099 DIV or off of the 1099 INT, but this could come, the INT might be before the DIV. Also, you may see one that has, that particular institution will say 1099 DIV and there's nothing listed here, and then 1099 INT and there is something listed here. That simply means that their form is the same. Taxable interest is reported on line 8A of your Form 1040. So here we have Sarah earned $49 in interest on money in her bank savings account. She must report the $49 as interest, even if she did not withdraw it from the bank or use it this year. It was still earned. It would be reported. And in the case of this, you would probably see it in the last bank statement of the year, as opposed to the bank sending out a separate 1099 INT. Different types of taxable interest, bank accounts, and if you make a loan to someone else, if someone's buying something from you and you agree to allow them to pay you interest and the principal over time, that interest is also, it is still reportable, even though you don't receive a form from a bank. Similarly, you should, if the item happens to be a house, you should provide some sort of end-of-year statement to the person buying it that tells them what they paid you in interest, because the interest they paid to you would be tax deductible to them. So that's taxable interest. This is what a Schedule B looks like. The top portion is to report the details of your interest. The bottom portion is to report the details of ordinary dividends. If either portion is over the $1,500, you do want to complete the Schedule B. My recommendation is to go ahead, and if the total's over $1,500, you want to put all information on that Schedule B. So if your interest is less than $1,500 and your dividends is over, I would still recommend listing your interest information, individually, putting your line items together here on the Schedule B. So here we have Luke received $1,500 in interest income from BB&T Bank this year. He will report the $1,500 directly on line 8A. If his interest had been $1,501, he would also need to report it on the Schedule B. So the first one is where they're just showing you if it's $1,500, you can put it just right there. And if it's over $1,500, meaning 1,501, you would put it here, and the number up here would be 1,501 in the event that it was an example showing just the second one. So that's what this example is showing you here. Taxable interest, here's some of the items that you can have taxable interest from. Certificates of deposits. Also, if you have a credit union, it's going to be reported as dividends, but it's actually deposits of shares and accounts from credit unions. If you have U.S. obligations, U.S. savings bonds, installment sale payments, life insurance proceeds, many whole life vehicles will pay you interest, and over time the interest begins to pay the annual premiums, and you would see that life insurance proceed. They would send you a 1099 INT. In addition, if you have a tax refund that was held for longer than the normal holding period, you may receive a 1099 INT from that jurisdiction. So for example, as a tax preparer, I oftentimes have clients that we're doing amendments to get them back tax refunds from prior years. They will receive the tax refund and interest on that money. And then at the end of the year, they'll receive a 1099 INT in addition to their statement about the tax refund. If you receive a gift for opening a checking account, they give you a $20 gift card, that's actually considered taxable interest for that bank account. Looking at U.S. savings bonds, there are multiple types of bonds. You've got the HH, the EE, and the I bonds. Each of these have different types of benefits for using the proceeds, and they earn different rates. And you would need to look at the specifics for that particular bond type to determine if there's any tax advantages for you. In the event that you have a certificate of deposit or a cash deposit, these CDs, they haven't been earning much lately, but this is a source of income for people who were able to put the money in the CDs years ago. If you buy a CD that has a maturity that's more than 1 year, you would want to count the interest each year. If you have an early withdrawal penalty, that would be provided you do that in the adjustment section. We'll talk about that again when we start talking about the adjustment portion of calculating your AGI. It would be reported in the box 2. You would see that early withdrawal penalty, and we put that on the line 30 of the Form 1040. So here's an example where Tom has a CD that matures in January of 2019. It paid $75 in interest in 2016. Does Tom need to include the $75 as income on his 2016 return? And the answer is yes. This is one of the common things that people do not know, is that it would be a requirement to go ahead and declare that interest in the year that it is earned, which is actually a benefit because you're not putting all of the interest in the year that you pull the money out. Other types of interest we talked about already: the gift opening an account, life insurance proceeds, and tax refunds. There is some interest that is tax exempt. This would include usually bonds that are state and political subdivisions where you're earning interest. That interest would be tax exempt. You would include it in line 8B. So line 8B is for tax exempt interest. Moving away from interest and into dividends. Dividends are typically for distribution of money for stocks or other property that's paid to you by a corporation. And again, if you have dividends over $1,500, they would need to be reported on Part 2 of the Schedule B. Dividends may also come from a partnership, estate, trust, or an S corporation. In that instance, you would see the dividend reported on the K-1 from that particular entity. And as you're inputting the information for the K-1 into the tax return, it clearly states whether it's dividends or interest. The major types of dividends include ordinary dividends, capital gain distributions, non-dividend distributions, as well as other distributions. These are the various boxes that appear on the 1099 DIV. Ordinary dividends are taxable income and are paid out of the earnings and profits of the company. They are not capital gains. It will say clearly if something is capital gains. So here you have your ordinary dividends, and you would go ahead and list them out. You would list the name of the payer, so AT&T Corporation and $1,265, and Verizon and $635, and then you would total it here. So here's an example where they just have New York Money Market Fund. Qualifying dividends are the ordinary dividends that receive favorable tax rates. Qualified dividends would be shown in box 1 of the Form 1099 DIV. And it's very clear when you're actually looking at someone's return. So capital gain distributions would be reported on box 2A. So I'm going to bump up real quick and just go through this 1099 DIV since it's been a little while since we were looking at it. And you see here you've got your ordinary dividends are in 1A. Qualified dividends, which receive special treatment, are in 1B. If you had a capital gain distribution, you would see it here in 2A. As well as the non-dividend distributions, any foreign taxes paid. So it's just a matter of matching up the boxes with the information that's required on the tax return itself. Now let me get back to where we were. Mutual funds are regulated investment companies, and these pass their capital gains onto their investors in the form of that capital gain distribution. So you'll see it in that box 2A. It does not go in the dividend line on your 1040. It's actually reported on line 13. And you would check the box if you are just reporting capital gain distributions and you don't actually need to do a full Schedule D. Then you would go ahead and put an X mark on Schedule D that you're not going to be providing it, and it would look just like this. So here was $695 of capital gain distributions, and they indicate that they are not filing a Schedule D by checking this box. Non-dividend distributions that are reported oftentimes on the 1099 DIV. There can be a return of capital gain that is provided, and in this instance, very similarly to when you start getting into the 1099-B, which is the brokerage accounts, you are going to be responsible for, or the customer, you, the taxpayer, is going to be responsible for ensuring that they have the cost basis handy, that they know what they paid. So that's something that we're going to need to keep track of, or whether the taxpayer, whether it's you that's the taxpayer or whether it's your client that's the taxpayer. So in this case, we've got the person is James. James is the taxpayer, and in 2000 he purchased stock for $5,000, and he received a return of premium payment in 2009 of $1,500, and then in 2016 he received a return of a return of capital of $4,500. So the question is, what is the amount that would be taxable? So $1,500 of the cost basis of the $5,000 was received in 2009, which would reduce the overall cost basis to $3,500 after 2009. So when they received $4,500 in 2016, there is going to be $1,000 left of taxable that it is not just simply return of capital. There is, if you happen to live in the state of Alaska, Alaska actually provides a permanent fund dividend, and these are actually not dividends. They would be reported on line 21 as other income. So in the event that you have a client from Alaska and they receive this permanent fund dividend, it's reported in line 21. And that particular exception, Alaska Permanent Fund, you can definitely Google it. You can put it in the IRS. It's just kind of one of those one-off things, but there's a lot of comments and publication and instructions for something like that. Now, taxable state and local income tax refunds. If you receive a refund from your state taxes, it's not taxable if you claimed a standard deduction. Or if you elected to deduct the state and local general sales tax on your Schedule A. If you used a Schedule A and you itemized your deductions in the year that you received the refund, it may be taxable. So there is a form, and I think we're going to go through an example here. So Natalie received a Form 1099-G for a state refund of $325. In 2015, her itemization was $7,500 and her filing status was single. So we're going to walk through the worksheet to show what amount of the $325 will be taxable. So the amount that was provided initially, the amount she received on her Form 1099-G was $325. The amount that she itemized was $7,400. And you look at what the amount of the standard deduction would have been was $6,300. So she received $1,100 over her original deduction, the standard deduction. She received $1,100 additional itemization. And then you see that the $325 will all be taxable. So if her refund had been $1,325, only $225 of it would not have been taxable. So what you do is you subtract that amount to determine if the amount that they receive is over the amount that they saved, then only the amount that is up to the amount that they reported on their Schedule A is taxable. So it is necessary. Most software does this calculation for you, but if you're asked questions about the prior year Schedule A amount, this would be the reason why. It's to determine whether or not their refund was taxable. So the key ideas in this particular chapter were to understand that if you have interest and or dividend income that's over $1,500, it would be reported on the Schedule B. We also reviewed some of the lines specifically regarding the 1099 INT and the 1099 DIV. If you received any unemployment compensation on a 1099-G, this would be reported on line 19. If you have early withdrawal penalties from a CD, that would be reported on line 30 of the 1040. And you report capital gains distributions that are received on a 1099 DIV. You would actually report those on line 13, not on line 9. And state and local government refunds could be included in taxable income if you itemized your deductions in the year that the refund is for. So those are the key ideas for this particular lesson. As always, we take our information directly from publication 17. And if you have any questions, you can reach out to us on our website at www.freedomfinancialpartnersllc.com. Thank you very much for your time today. I hope everybody's having a good day, and we'll be posting the other videos shortly. Thank you.